Hey everyone, it is Evan here from the Trade Risk on Tuesday, April 7th, here with a midweek market recap video. We're going to cover all of the major markets and the current market environment. So we're going to jump right into our technicals dashboard. You can see markets closed pretty much flat here on the session, but that does not tell the full story because we did start off the day with a pretty sizable gap higher, and we did proceed to sort of fail to hold on to those gains and close around flat. So we're going to talk about that in just a moment, but we can still see that the 5-day change numbers, generally speaking, in positive territory here, about 2 to 3% rally over the past 5 trading sessions in the Dow, SPY, and Qs. Russell 2000 being a little bit stubborn, still hanging out in negative territory. Despite that, though, all of the major indices are above the 10-period simple moving average, still below the 50 and the 200-day. If we scroll down and take a look at sectors, again, a pretty positive story, generally speaking, over the past 5 trading sessions. Energy, the largest rebounder, really, and certainly the most beaten up of all of the sectors throughout the course of this year, but a 10% surge over the past 5 days, followed by semiconductors and materials. And on the downside, utilities, biotech, and industrials rounding out the bottom 3. Only utilities holding negative over the past week of trading. Now, in terms of major markets, oil going hand in hand here with this energy trade that has been on, so getting a strong bounce. Natural gas getting a sharp rally as well. We're going to talk about that. And silver up 7% here over the past 5 trading sessions. On the downside, VIX, high yield, and the 10-year, so kind of mid-year duration bond fund, all underperforming and seeing some negative price action over the past week. Now, let's jump into the charts here with the S&P 500. We always like to start with a weekly time frame, and we always use the cash settled market for the S&P 500, and this is the weekly picture. So each bar represents 1 week worth of trading, and you can see that the train wreck waterfall lower action has stopped, and it stopped really 2 weeks ago at this point, and we've been kind of floating higher in a kind of transitioning, or at least a slightly different character market since we bottomed out back in the last week of March. So as it stands right here at the time of recording this on Tuesday, we're up 8% on this week. We're a little bit off of the highs. Certainly there's 3 trading sessions left in this week, so this weekly bar will look different come Friday, but this is encouraging to see the buyers continuing to hold on to the reversal and the gains that we have staged here over the past 2 weeks worth of trading. So it's encouraging from a stabilization standpoint and some price structure to be put underneath us, and some confidence in here that people are stepping up and buying this market, or at least are not selling it as aggressive. The sellers aren't as aggressive offering out stock as they were just 3 weeks ago. So the mood of the market has changed, and if we go down to a daily chart here, and we talk about what's developed over the past several days, we'll continue with the positive action. And if you've been watching the last couple of videos here, I think we've been really on top of this scenario unraveling, or being the scenario that sort of unfolds here in the market, because we talked about this these 3 levels here, the 2440, 2346, 2290. Again, some personal massaging of those levels, but those are what I felt were most relevant for this market to hang above and hold. And we did manage to hold above all 3. So our most bullish scenario here, where the market held over the 2440 level, did pan out. We had last week we had this breakdown event from this little tightening action that we finally saw in here. We broke down, we went sideways for 3 sessions here, just overlapping, ping-ponging back and forth, and we basically had this kind of volatility expansion event on our horizon coming into this week, because again we had the compression in range here. The stage was sort of set for either a rollover and fill of this lower gap or some type of ignition higher to close this gap that was above us. And of course we saw that it was the latter. We got the ignition to the upside here, and what that did was put in a higher low to now trade against. And this is one of the scenarios that we certainly didn't predict, or not doing any type of victory laps here or claiming any forecasting ability. We basically talked about all three scenarios: the V-shaped scenario, the rollover and retest scenario, and we talked about the higher low scenario. And we ended up seeing the higher low scenario be the way the market has unfolded, and this is why we kind of keep an open mind. And this is the point of these market recap videos, is to basically think about the possible scenarios in which this market can trade in the future, and to have a plan for everything, to not be caught with a deer in the headlights. If you were thinking about a potential, gap up scenario or some type of higher low scenario, then you may have been able to act very objectively and very quick, catching on to this rally. If you didn't have any exposure here, maybe you added some on Monday, and participated a little bit in this move, if that's your short-term style. Again, there's lots of different time horizons that watch these videos, so it's very difficult to speak to sort of everyone's interest here. But if you're a short-term active trader, this is certainly a one of the setups that you could have kind of captured and traded. So what we have basically is we left in the dust, and this is why this pattern is pretty powerful, is because, again, we had this 3 days of very tight range. So essentially everyone that traded in here around 2,500 was kind of picking a side here, either lightning exposure or accumulating exposure in the market. And we basically had this 3-day sideways game that we played. And what happens is we effectively have this little mini island of price action that gets trapped down here. Now, I'm not using the traditional terms of an island reversal or anything like that, just my loose definition here of basically price action where we gap down, and we had essentially this open gap here where if you were a seller, if you wanted to get out of the market here, you were forced to kind of sell out on this session here at prices much lower than the prior Tuesday. And then, if you started to buy back some and you started to accumulate and press those and add to those positions, so on and so forth, you essentially get this trapped supply in here. And then when you gap up in this direction, you leave effectively this band of trading here. So if anybody was adding short exposure, playing for the breakdown, or lightening up exposure on and in this range, you're now forced to either chase your long exposure or cover your shorts. Either way, you're kind of a forced buyer at this point, and at the same time, you're basically breaking through resistance here and potentially, starting the second leg higher. Now, couple of things to note here is that this session on Tuesday certainly didn't end as bullish as bulls would have hoped, right? Because we opened up near the highs and we gave back most of those gains, and we closed near the lows. So in the very short term, we essentially do have a little bit of indecision, a little bit of cause for concern, a little bit of doubt and uncertainty. But the way basically I would look at this now is certainly, from the big picture, 2440 now, I think that's a really good level to use, because essentially it's the lows of this recent consolidation point. It's the top end of resistance here in late March, and now it's kind of the higher low point to measure risk against. Now, above that, it's basically this zone right here. To keep this market as bullish, as optimistic, and as pent up as possible, we would want to see this continue to hold over 2635. If we start rolling over below 2635, we get a daily close underneath this range. That is going to certainly throw some cold water on this rally, because we failed to effectively break out and continue in this higher low fashion and take out that resistance here in the very short term. Again, all of this speaking to the short-term tactical traders that are trying to juke and jive with sort of every day that's unfolding here. If you're longer term, this is too much into the weeds for you, and it's probably still just a bunch of noise in your mind, and certainly rightfully so if you're thinking about this market over the next months or year plus at a time. So in the short term, 26.35, 24.40, I think those are the relevant levels, and the good news is we have some levels to finally use as price structures, demand areas, as inflection points, as shorter term traders. So that's the encouraging part. The near term, sell off here on Tuesday's session was negative. We'll see how we finish out the week. All in all, though, we are seeing, the VIX, and we're seeing a little bit of stability here. Although the VIX, I think you could make a case kind of either way here, because it's certainly well off of the 80s that we were trading in just two and a half weeks ago. We basically cut the VIX in half. We're trading around 44, but it's starting to look like, there's some interest here, or it's a little bit reluctant to, essentially sell off beyond or below this mid 40s area. So we're going to have to kind of watch this closely. Sometimes I like to look at the derivative, another derivative here. So basically looking at the volatility of volatility, and I don't want to get too into the weeds here, but I actually do think it's sort of constructive that we are seeing this continue to spill over here, which basically means that the rush for protection, the demand for protection is still kind of lowering right now, is still on the pullback. And I think that's a net positive thing. But of course, we know that generally speaking, events can change very quickly, especially overnight and in this type of environment. So all in all, in the short term, I think you're getting some wins here by the bulls, kind of stacking up more evidence, more structure underneath price action. But if we want to throw some cold water on some of this analysis now, if we want to think about a little bit more of the potential negatives or the uncertainty in this environment, let's do that now. So first and foremost, let's remember, we are still about 21%, a little over 20% off of the all-time highs. So while this recovery has been nice, while we've enjoyed about a 20%, 25% rally off of the lows, we're still 20% off of the highs. So basically, we have a lot more to do, a lot more repair, and a lot more kind of stabilization to prove to unwind all of the technical damage from last month. So that is a slight sort of negative right there. The other negative is if we look at the Russell 2000, Russell 2000 did not break out. So if we look here at, I don't know what board I was using, but we'll just stick here. But if we just look at the Russell 2000, this did not take out the highs here from the last week of March. You can see it attempted to kind of poke its head above this 117 area, but then it faded and it closed near the lows here, just like the rest of the broad averages. So the Russell, I think, is still in kind of a tough spot. It's certainly a nice rebound and a nice reflexive rally here this week. So again, all is not lost, all is not hopeless here. This could be the potential higher low that sticks for the Russell, but now we're going to want to see resistance get taken out, and we're going to want to see bulls stake their claim over 117. So for now, that's still a slight negative here, is that the Russell is still pretty weak. And what's actually even more interesting and potentially more concerning, but it's still a small factor yet, is the Nasdaq 100. So the Nasdaq 100 has been our leader. Technology, semiconductors, they've been effectively weathering the storm a little bit better than the rest of the market. Software in general kind of makes sense here, but when we look at the Qs and we look at today's action specifically, notice that it actually closed negative on the session. So we had this nice gap up, and this had a complete fade here into the session. And you can look at the big bellwethers here like Apple, certainly I think contributing to some of the exhaustion here. And I think that's what it is. That's what it might be here, is a little bit of just exhaustion, or a little bit of a tired market here as this has rebounded and tried to hold up the rest of the stock market. And I think this is going to be an interesting spot to watch. Again, I don't want to get too hung over or too hung up on just this one candle candle, because that's all we're looking at. That's all this evidence points to right now, is just this one day where the Nasdaq underperformed. But what we want to now pay attention to is to see if this becomes a trend, and if this becomes a pattern where the Nasdaq now starts to underperform, or the Nasdaq starts to roll over and the sellers get some follow through here, then I think we're in some deeper trouble, because the Nasdaq has been the bright spot in this market. So essentially what we saw was, kind of technology take a breather, and we saw things like energy and industrials and materials start to lead a little bit better here, or at least help the market stabilize on this latest leg higher. So that is, those are a couple of the negative factors that are still in this market. And I think all in all, when you kind of sum it all up together, we still are in a higher volatility environment, and there's two-way trading to be had. There's volatility in both directions, and there's opportunity in both directions. And I think there's just lots of cross currents right now. And that's really the best way to kind of think about it, is that there is uncertainty out here. There's good points, there's negative points. And I think the market is essentially trying to wade through those headlines, those catalysts, and kind of figure out, where prices, where assets should be priced, given, everything good and bad that we're seeing out there. So yeah, that I think covers the bulk of my thoughts here on the major markets. Last kind of overall advice comment here is basically, don't try not to, and certainly something that's easier said than done, but try not to FOMO into buying positions here into these moves. If your plan was to kind of sit sideline, but now you're seeing the market rally and you're naturally getting, kind of anxious to participate and to chase this move and to, enjoy the bounce here, you really need to do your best to prevent yourself from making kind of emotional buys at this point. And again, this is very different than maybe you like and you wanted to see this market start to take out this resistance here. You wanted to see the higher low. You wanted to see the market take out resistance, and maybe 26.35 was your trigger to buy. And if that's your plan, then absolutely continue with that. That makes sense. Trade your plan. Don't try and get emotional or feel the FOMO to chase this market, because that's just not going to end well. And if it does end well, it's going to create some bad habits. So, all in all, it doesn't end well either way. So that's just some general advice there, and hopefully, hopefully you guys are navigating this just fine. So let's jump into some other markets now. Go to TLT. TLT here on the week is down 1.31%. You can see here back on this general area, looks like we kind of have this zone here where the market is kind of paying homage to this 166 to 170 area. This has been a little bit of a technical resistance hesitation spot for TLT. Again, kind of the similar comments here, like we've been saying. Just some digestion in general is a good thing. We're seeing volume dry up a little bit. That's good. And letting this market kind of cool off, I think all in all is just good. No real comments to add to TLT at this point. GLD here is working itself back up to the upper end of this range. Had a very strong session yesterday, up 2.77%. 158.50, that's more or less the level where we ran into resistance in early March. We're climbing our way back up there. Bulls holding on to the trend here. So life looks pretty good in gold. Still could consider this range bound, but all in all, if we zoom out here, you can see it is in an uptrend for sure. Now silver continuing also in its rebound. Again, very different look here than gold. This had a very drastic drop here back in mid-March. It has recovered about half of that at this point, but it's still it's still in kind of a more precarious, kind of tricky situation. It's recovered above $13. I think it's in the best interest right now for the bulls to hold over $13. If it does, then there's some, there's potentially some opportunity there. If we look at energy next, you can see USO here rolling over today and this week. We're down 14%. Remember, this had, I think, its best week ever last week. Crude oil, 32% to the upside. Again, we're tracking the USO, the ETF here, so it might not be tracking spot exact, but we are giving some of that back this week here. You can see putting maybe, adding to some of the pressure in the market here on today's fade. But USO trying to put out some type of bottoming pattern here. We do have some good positive momentum divergence, high volume coming in. So again, lots of volume, lots of opportunity here for the short-term traders, but for now the trend remains very much to the downside, and it's really just trying to figure out and potentially find that bottom. Last but not least is natural gas, and natural gas I think is the interesting play here now, and you know, it's something that we've been talking about here. It's been a pretty lifeless trade, natural gas, for some time now. It's continued to just trend lower and lower and lower, and it's had all these little fits and starts where it's tried to rebound, and it looked like, you know, this was the turnaround for it, and then it ultimately starts fading and rolls back over. Here we have another attempt to reverse course here for natural gas, and it looks promising. It's back over 1320. That was our first sort of reversal trigger here that we talked about in our last video, of getting back above to show some signs of reversal. We've got 3 strong sessions here of closing, you know, basically opening at the lows, closing at the highs here. We had follow through yesterday. We got more follow through today on Tuesday. So it looks like something is happening here in natural gas. I'd pay attention to it. Again, this has been a disappointing reversal trade over the past many months. So this is probably left best to the more advanced traders or more experienced traders to just be able to manage this volatility and uncertainty. But I think natural gas over $13, worth a look here, especially if you're active and nimble. So that's it. That is what I have for this week. Thanks so much, as always, for tuning in and watching. Every Tuesday and Friday, we do market recaps just like this. You can subscribe to our YouTube channel or follow us at The Trade Risk. Hopefully, you guys had a good day trading. Thanks so much for watching, and we'll see you back here tomorrow for some trade ideas during the market session.